Hello students, welcome to the study of social science. This is the fourth video lecture of Economics chapter 3, Money and Credit for class 10. In this video, our topics are formal sector loans and informal sector loans and self-help groups for the poor. In our last video lecture, we were talking about loans. People take different types of loans from various sources like banks, moneylenders, traders and relatives. The different types of loans or credits can be divided into two groups, formal sector loans and informal sector loans. The formal sector loans are such loans that are taken either from the banks or from the cooperatives. What are cooperatives? Cooperatives are financial societies. They are run and controlled by their members. Members of cooperative collect their savings to provide loan to its members at low interest rate. And what are the informal sector loans? The informal sector loans are those which are taken from informal sources such as moneylenders, traders, employers, relatives and friends. Let's see the difference between formal and informal sector loans. The functioning of formal sector loans is supervised by the Reserve Bank of India. The Reserve Bank of India plays a crucial role in supervising the formal sector loans. The RBI monitors whether the banks are maintaining the cash balance of loans or not. The RBI also checks that the banks give loans not just to businessmen and traders but also to small farmers and needy people for their small scale businesses. And from time to time, banks have to submit all the information to the RBI. The banks inform the RBI how much the banks are lending, whom they are lending, and what interest rate banks are lending. But when we see the informal sector loans, in informal sector there is no organization that supervises the credit activities of lenders. Money lenders or traders can lend the money at whatever interest rate they select. Sometimes the earnings of the borrowers are not enough to pay off the high interest rate. And when they fail to repay the loan on time, moneylenders use unfair means to get their money back and no one there to stop them. If you observe graph 2 on page number 49, we find that 90% of the loans of the formal sector are taken by rich people and only 10% of loans of the formal sector are taken by poor households. And in informal sector, 85% of loans are taken by poor households and only 15% of the loans of the informal sector are taken by rich households, which means the poor are still dependent on the informal sector for loans and the rich people can receive formal sector loans easily. Thus, it is necessary that banks and cooperatives should increase their lending in every part of India, especially in rural areas of India, so that people can get cheap and affordable credits. And it is also necessary that everyone can get these loans easily. Next, we have the self-help group for the poor. A self-help group is one of the new ways to provide affordable loans to the poor. It is a group of 10 to 20 women who collect their savings and provide loans to the members of the group itself. Members can take small loans from the group at a reasonable interest rate. And after 1 or 2 years, if the group is regular in savings, it becomes eligible for taking loans from the bank. And the loans are granted in the name of the group. The repayment of loan is not only the responsibility of 1 or 2 members of the group, but all the members of the group are responsible for the repayment of loan. Thus, the self-help group are very helpful. They help the women to take small loans without collateral. Women get loans at reasonable interest rates for a variety of purposes like buying seeds, fertilizers or cattle. Thus, the self-help groups help the women to become financially self-dependent. The self-help groups create awareness of social issues and provide a platform to discuss them. During the regular meetings of the group, women discuss different issues such as health, nutrition, domestic violence, and their other problems and try to find the solution. You can write in short, the different types of loans or credits can be divided into two groups, formal sector loans and informal sector loans. Formal sector loans are taken either from the bank or from the cooperatives. Informal sector loans are those which are taken from moneylenders, traders, employers or relatives. The difference between formal and informal sector loans. The Reserve Bank of India supervises the functioning of formal sector loans. The RBI monitors whether the banks are maintaining the cash balance of loans or not. The RBI also checks that the banks give loans not just to businessmen and traders but also to small farmers and needy people. Banks have to submit all the information on how much they are lending, whom they are lending, and what interest rate they are lending. And in informal sector, there is no organization that supervises the credit activities of lenders. Money lenders or traders can lend the money at whatever interest rate they select. Sometimes lenders use unfair means to get their money back. Thus, it is necessary that banks and cooperatives should increase their lending, especially in rural areas of India, so that people can get cheap and affordable credits. Self-help group for the poor. A self-help group is a group of 10 to 20 women who collect their savings and provide loans to the members at a reasonable interest rate. They get loans from a variety of purposes like buying seeds, fertilizers or cattle. And the regular meetings of the group provide a platform to discuss a variety of social issues such as health, nutrition, domestic violence. Women can discuss these issues and can find the solution. So that's it about today's video. If you like the video, please do like, share with your friends, and don't forget to subscribe. Thank you for watching.